All right, today we're going to break down Redwire Corporation, a really interesting player in this booming space economy. So, is this company actually poised for liftoff, or is it just burning through cash way too fast on the launch pad? We're going to look at the business, the financials, and, what the market charts are telling us to figure out if this is a real long-term investment. Okay, let's get into it. This quote just hits the nail on the head, doesn't it? The commercialization of space, it's happening right now. And it's basically a modern-day gold rush. And, in any gold rush, some of the smartest folks aren't the ones digging for gold, but the ones selling the pickaxes and shovels. So what does this new gold rush in space actually look like? Well, we're seeing this massive shift away from the old way of doing things. The slow, super expensive, government-only projects. The new space race is all about speed. It's about commercial profits, and it's all about scale. And this slide right here, this is the core of the change. I mean, think about it. Instead of spending years building one single handcrafted satellite, companies are now launching these huge constellations, sometimes thousands of smaller standardized units. And this creates an absolutely enormous demand for reliable, kind of off-the-shelf parts. This is exactly where Redwire comes into the picture. The best way to think about their whole strategy is to see them as the pickaxe seller for this new space gold rush. They're not launching their own satellite internet, they're providing the critical gear for literally everyone else who is. Now, what's so smart about this model is that Redwire doesn't have to bet on which satellite company is going to win the race. Nope. As long as the whole industry is growing, the demand for their tools, their infrastructure, grows right along with it. They want to be the foundational supplier for the entire ecosystem. It's a pretty clever place to be. And this isn't just some theory. Their toolkit is real, it's diverse, and it's pretty impressive. They build everything from these proven Rasa solar arrays that power the International Space Station to really cutting-edge stuff like in-orbit labs for drug development to tactical drones that have been used in combat, and they even offer full satellite manufacturing services. Okay. So with that as our foundation, let's build the bull case for Redwire. Why would an investor get excited about this company's future? Well, it really boils down to three things: their customers, the market trends, and some really strong signals from their leadership. First off, just look at who they're selling to. We're talking about the absolute biggest names in space: NASA, the Department of Defense, the European Space Agency. These aren't startups that could disappear tomorrow. They are stable, deep-pocketed government agencies, and that gives Redwire a huge layer of credibility. On top of that incredible customer base, the market tailwinds they're like a hurricane at their back. We're expecting over 70,000 new satellites in low Earth orbit. New defense projects are ramping up like crazy, and their tech, like those ROSA solar arrays, has a perfect 100% success rate in space. The demand is just undeniable. Management is also making some really smart moves. They've been cleaning up their balance sheet, getting their net debt down to almost zero, which is saving them millions in interest payments. And get this, they just added a former U.S. Space Force acquisitions executive to their board. I mean, that's a massive signal that they're getting even closer with their biggest government customers. And all of this leads to this one huge number, a record $411 million contract backlog. That's up 39% in just a year. It's a powerful, real-world metric that just screams that the demand for their pickaxes is absolutely surging. But, and there's always a but, isn't there? A giant backlog doesn't automatically make something a great investment. For every bull case, there's a bear case. And for Redwire, it really all comes down to one simple, nagging question: where is the profit? And here it is, the immediate contrast. Despite that massive backlog, recent financials show the company burned through over $200 million in free cash flow. This is the critical gap right here between winning contracts and actually turning them into cold, hard cash in the bank. And if we take a closer look at the financials from that same period, the picture gets even clearer, and not in a good way. A net loss of $227 million, a gross margin that is razor-thin, just 5.2%, and negative operating cash flow. I mean, from a classic investing point of view, these numbers are flashing some serious warning signs. And beyond the red ink, there are some real structural risks here. Almost 40% of their revenue comes from just 2 customers. That's a ton of concentration. Their accounting has had some adjustments that can make profits swing wildly. And they've bought 11 different companies since 2020. That's a lot to integrate. The bottom line is, they haven't yet built what investors call a moat, that durable competitive advantage that protects them from rivals. This all leads to a really major disconnect. The market has the stock priced over $8 a share, but a pretty conservative valuation model, based on its actual fundamentals, puts its intrinsic value closer to just $2. That suggests the market is priced in years of perfect execution, leaving absolutely no room for error. So, we have the exciting bull story on one side and the pretty scary bear fundamentals on the other. But what if we look at this from a totally different angle? Let's check out the stock chart itself and see what story the price action is telling us. So, can patterns in a stock's price really give us clues about what investors are thinking and where it might be headed next? Technical analysts sure think so. Let's see what they're seeing in Redwire's chart. Now, what's really fascinating here is something called an Elliott wave pattern. The theory is basically that markets move in these predictable waves. You can see a pretty clear 5-wave rise, which is the impulse, peaking there at wave 5, and that's often followed by a 3-way A, B, C correction. According to this analysis, it looks like the stock is currently in that final downward C wave. And this little scorecard helps us kind of check the work. It shows that the initial 5-wave rally part is reasonable and compliant with all the rules, but it also flags a few weaknesses. It notes that the RSI, which is a momentum indicator, is neutral. It's not yet showing that the stock is oversold or, ready for a huge bounce back. Okay, let's bring it all home. We've looked at the exciting bull case, the sobering bear case with the financials, and the technical view from the charts. So what's the final verdict on Redwire as a long-term investment based on all this? The source material comes to a pretty clear conclusion here. The opportunity in space is real, no doubt, but the financial risks and the current valuation are just too high to jump in right now. It's a classic watchlist stock. So the next question is obvious. What should we be watching for? Here are the specific, measurable milestones. First and foremost, this company has to stop burning cash and start generating sustained positive free cash flow, period. We need to see those gross margins improve significantly, getting up into the double digits. They have to prove they can turn that giant backlog into real, profitable revenue. And finally, if they could shift more towards stable, predictable production contracts, that would make the business a whole lot less volatile. And at the end of the day, this is the real tension here. Redwire is undeniably building critical infrastructure for the future of the entire space economy. The story is fantastic, but the financials today, not so much. So the crucial question for any potential investor is really simple. How long are you willing to wait for that future to arrive?